Traders all over the world are already using switch markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together, right here on the Switch Markets YouTube channel. If you want to be a part of it, subscribe and tune in daily. I'm here to answer your questions live.
Time moves in a constant rhythm. Every second counts. Every decision carries weight. In trading, the cycle never stops. Opportunities appear, they disappear, sometimes before I'm ready. Even when I step away, the market keeps moving. What if I'm wrong? What if I miss? What if this one turns against me? Every chart I've ever studied, every level I've marked, every rule I've committed to, all of it comes down to one moment. Executed with clarity, without hesitation. Because control is choice. And in that moment, control becomes edge. Switch markets. Trade with discipline.
If you're already trading, why settle for average? Switch Markets is raising the bar. Tools, resources, dedicated live support. It's time to make the switch to Switch Markets. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to unpack an incredibly live news cycle. We're going to take a look at everything from crude oil to gold. We've got 3 trade ideas out there. 2 of them are performing. Well, one of them is performing very well. The Bitcoin trade, not doing great. Maybe already got stopped out on that one, but still, it's bouncing back, and our level doesn't look as bad as it looked about 2 hours ago. U.S. oil, though, I'm watching U.S. oil come off a bit. Brent's come off a bit. It just sort of seems like the seesaw battle, that is the global energy markets continues, and it all has to do. It's all predicated upon based on whatever happens in the Iran war. We had a big vote out of the U.S. House of Representatives last night. I got to recap that because even though I'm going to tell you why it doesn't really mean a whole heck of a lot, but it also means a heck of a lot if we start thinking long term, 1 month, 6 weeks, 8 weeks. And we have to start really, really looking at our odds and what we think is going to happen there. To be honest with you, I stepped away from all of it for a week. Didn't look at any Iran news, didn't do any of it, and came right back, and it's like nothing happened. It's still the same situation, and I'm very, very surprised that there is no more aggressive moves that are happening to wrap this war up because it is dictating absolutely everything in the world of finance. Everything. We had an incredibly strange U.S. Open today. I'm going to go through that as well. We had the Dow open way up, and we had NASDAQ open way down. A lot of people on the financial media were going, bubble, bubble. That's the AI bubble. And I said, not so fast, my friend. These stocks are valued so high right now that that is just almost a function of intraday chop and sort of the life we lead right now as active traders. And I also got a great message that if we have time, I would really like to dive into because it was an observation from an astute gold trader that's been with the community ever since I've been here, 4 years, 3 or 4 years, watched a lot of live streams, has contributed a lot of trade ideas and things. And I want to really go over what that trader had to say about how this year has gone for them. I always sort of lean back. All the beginners, I always like to listen for new ideas and good inspiration, and I always love to see the folks show up to the market that are hungry, they're inspired, and they're ready to go. But when a veteran of the markets talks about their experience and it starts ringing bells with my own experience over the past few months, it means something's there. It means something is sort of glaring in our face. So we're going to talk a little bit about that as well towards the end of the stream. So I want to welcome everybody out there in YouTube land. Gordon Williams, always a pleasure. Gordon, welcome back. Kelvin, good to see you, Kelvin. Jason Maxon, hey, Jason, how are you doing? If you guys have any markets that you'd like me to look at, go ahead and let me know. It's an interactive trading experience, so if you guys have something you'd like done, we'll do it. As far as trading ideas go, we've got a few out there. I'm going to go over those because I really love those hot levels going into tomorrow's NFP, but we're going to try to execute some decent trades. We had a pretty good one in the NASDAQ yesterday that just didn't quite set up. We're going to go with that. Go ahead and look at that U.S. equities indices as well. See if we can make a few intraday trades, short-term trades, and get after it. So good to see everybody out in the How to Trade community. Lita, good to see you. Lita, welcome. Tuku, good to see you. You guys have anything you want to look at, let me know. All right, let's start off with WTI crude oil. You can see MT5, MT4 platform. This is MT5. I like MT5. It's got more options for our tradability, a lot more CFDs on there through switch. But if you take a good look at these markets, this is sort of the 4-hour chart for crude oil. Now, I don't look at the 4 hours ever, but we've got our 9 EMA strategy up, and it was sort of it was a good idea that we had last week. Said, Shane, what if you identify the trend on the macro time frames, can you go down to the small time frames and then trade the 9 EMA accordingly? I'd say absolutely. Absolutely. So let's take a look, start with this Brent, and you see, okay, what are we doing? Well, we're really selling off. So the last 4 hours, of course, has been flat. But in this sell-off situation, wouldn't it be better to be looking for maybe sells instead of buys? And you say, well, how do I know that it's trending? I'd say, well, this 4-hour chart broke beneath that 9 EMA, and it's sort of moving down with a good velocity. I would say that, hey, let's dial this down to maybe a 5-minute chart and see if we in fact got any signals. Now, you'll notice the thing that can really save you is that RSI. No RSI confirmation. So as long as you understand how the trend works, couple that with your RSI, you're going to be in pretty good shape. And what that can keep you away from is trades like this. That's absolutely brutal. 1-minute chart, Brent crude. Yeah, there's good volatility, and you got a little bit of positive action, but the market basically came down and knocked you out. Why? Market's flat. You're in a downtrend. There's more sellers than buyers. So that's what I wanted to start off with, that 9 EMA strategy. I really like this one. I think that we're on the verge of something pretty special when we start incorporating multiple time frame analysis and trend analysis into what is a pretty just block and tackle way to trade the market. I mean, you've got the indicators, you've got the technical setup. That's really all you need. You can see WTI, really the same thing. 5-minute chart, no sell signals, no real buy signals. We haven't got outside of our RSI brackets in a long time. But look at the 1 minute. The 1 minute, trouble right there. Got a little bit of a bullish bounce, but that bearish pressure just took you out. It's too much to deal with. So always be aware of the macro trend. That can really help you out, especially if you're looking to get a high probability a high percentage of wins. For me, that's absolutely huge. That's absolutely huge. Just 1 second here, guys. I got a message coming in from a trader. Got to go ahead and share that up. What I would say is the biggest thing that you always have to monitor is, number one, what should you be trading and what is moving. So today we've got some good action on the Forex, and we've got some good action in Bitcoin. We've got some good action in gold. Australian dollar, Japanese yen treated us very well. That trade idea that came across the board. All right, let's go ahead and get started with Bitcoin. Bitcoin plunges, macro support in view. This was the trade idea. Basically, we were looking to buy 65,000s. It hasn't panned out very well at all. Let's go ahead to the 30-minute chart. You can see this is exactly what happened when we tested our support zone. We got a nice bounce from Bitcoin, up a little bit, and then we came off big, and then we retraced. This is always one of those things that I'm leery about. I like to play these really tight. We were looking for an initial bounce right back up to 67,000. You sort of got that right here from about 65.3, 62. Our entry point was down here at about 65.1 1/4. So we were in somewhere right in here. We got the bounce back up to 65.7, 73. It's just not good enough. And the problem is that when this market takes out that support zone, then we move a lot lower. And right now, I would be honest with you, if you're still in this trade, you're still alive. You're not necessarily wrong. I would be long gone. I would have been gone probably right in here, about a 1-to-1 ratio. So 2,000, I'd be out probably somewhere around 63. So, what's our low down there? Low down there, 61. I would have been gone already. I would have taken the loss and moved on. Notice this price action, big bearish action, pull back right to that support zone, and then a failure. And then we came off. And now the question becomes, our support zone, it's now resistance. Or is it resistance? Yeah, it is. So we may see Bitcoin rally from here. In my view, if you're still holding longs, okay, you got to do what you got to do. For me, I would have been long gone, no question about it. And it was unfortunate because this area right in here was when we got the big vote out of the House of Representatives in the United States. Believe it or not, it brought volatility to all the markets right ahead of that Japan Open. So a lot going on right there. I definitely want to cover that one. This one's a little bit happier, a little happier of a story. This Australian dollar, Japanese yen, you can see we got a really nice bounce. Really a crisp entry right off of our 113.90 area. So we were looking at 113, excuse me, we're looking at like 113.07, somewhere in that zone, or 113.97, 97, and we rallied up, and we're looking for about a 29 profit, so a pretty good payoff. We went to 114.25, still very much in within range of our kill zone here. If you wanted to take the profit right now, I wouldn't blame anybody for that. In my view, the run right at 114.25 in this Aussie yen, that's probably where we needed to be looking to exit. If we didn't break 25 hard, you probably just take the profits there. You don't sit around and mess with like a 25. Typically, that's why I put those next levels beneath the key levels, like a quarter handle, half handle, 3/4, and even number. The reason why is because I don't want that 25 to really keep us from that last 4 pips. Is it really worth staying in this trade right now? Well, there's no real reason to get out. And if you wanted to stay in there looking for the last 9 pips of this trade, and it wasn't a big trade, it was only looking for about 32 pips. But man, we were up there at a quarter. Probably a pretty good time to already take the money. Still, though, looking pretty good. I think we trade higher from here. I'm not overly concerned about it, but it still is a possibility. If you're holding this, I think you have to go back down to break even. You have to put your stop loss, your stop loss at break even. Number one rule of trading: never make a winner a loser. Never, never, never. This would be a trade. We're looking for 32 pips. We went 28 pips. Probably take it. Rack it. If you want to stay in there, though, I understand. Sometimes you just got to let these things play out. Remember, that's not really a scalp. That's more of a short-term position. And when those position trades go in your favor, take the money. There's nothing wrong with taking the money. I don't know anybody that went broke in the history of trading taking profits. I don't know them. I don't know if they're out there or not. All right, this is one that we put out earlier today, this dollar CAD pullback in view. I wanted to highlight this because the dollar CAD's really been on fire. It's moving in a very, very strange fashion. It's not really related to oil right now, at least for the last several sessions. To me, that's a big deal. That means there's a major disconnect, and the U.S. dollar sort of has a mind of its own. And when we look at something like this, I'd say, well, what do we want to do? Well, to me, that was a big day yesterday, a big bullish day. We saw a bit of a pullback earlier in the session in the 38% level right there, right around 138.65. That's pretty juicy. So we were looking at 138.69, somewhere in that level for a quick 20-point pop. I think this is a really strong idea. If we do get the pullback from here, 38%, I like it. We've moved higher. Market structure is still not compromised. We're still very bullish here. If you look at the daily, I mean, this is what it is. If you wanted to wait for a better entry, 138.29, 25, absolutely. That could be fantastic. But you could, what you could do is just be hyper aggressive here, 138.65, 138.69. I think for 20 pips, not a bad trade, but with NFP coming up tomorrow during the U.S. pre-market, you got to know what's there. You absolutely got to know, when that number drops. I'm going to have it live for you. I'm going to be on 10 minutes ahead. But what we'll have cooking there is definitely some volatility hitting the dollar CAD. I would love this trade like right now. If we could get it to pull back and then actually be live going into the London session, that would be fantastic. But unfortunately, we can't dive into those things, that's for sure. All right, we got a question out there. Kelvin, can you look at the NASDAQ 100 1-hour chart, please? All right, let's do it. So there's the US 100. Same thing, NASDAQ 100. You want to look at the 1-hour chart? Okay, we've got absolutely, let's see, right. I was looking at 1 month chart, right? That's not quite what we want to do. So there's your NAS 100, cash CFD, looking right at just price action alone. There's no indicators on our chart there. What would you say would be the key element? The first, right off the top of your head, before I dive into the analysis and put all my indicators up there and break it down, what would be the key to this market? Bob, good to see you, Bobby. The key, 1-hour chart. A chart that I've heard a lot of folks trade the 1 hour during the U.S. session. I'm a 30-minute trader. I like those 30-minute blocks. Gives me a little bit more granularity on the price action. But what do we have? 5, 4, 3, 2, 1. We've got consolidation very, very early in the session, right during your pre-session. Then you have a break as we go right into the opening bell, ding, ding. Now, is the move big? No, it's not. You had a sell-off during the overnight that developed, right? So we come into this session essentially exceedingly bearish, right from right about here would be your London open, about 1 a.m. my time. Got a big break there, and then compression, and now you're rallying back up essentially towards where we started this whole journey. Now, what made this interesting today was the Dow Jones is up about 819 points, and the NASDAQ is in negative territory by 140. That's a major disconnect. You don't see that very often at all. So think about what we have here. We've got the Dow that's up big, we've got the NASDAQ that's in the red, and you've got the S&P 500 that's not doing anything. It's fascinating stuff. You do not see that very often. You do not see that very often at all. Even on big earnings reports, very rarely do you see that kind of divergence between the equities indices here in the United States. Typically, birds of a feather run together, and even though the moves are different in each one, typically you don't see that big of a divide where the Dow is up 1.6% and the US 100 is actually just broke positive. NASDAQ is the broad NASDAQ index is down a bit, but now that CFD is broken even. So there's a lot going on here, and these markets are muddied, very, very muddied. So you're not wrong to be on the short time frames. That's for sure. If you want to intraday trade, there's really nothing stopping us here. So with a 1 hour chart, just to be very, very blunt, I don't trade the 1 hour chart, and I do it because I like more granularity, but right there, that's the key level. So you'd be looking right now at the US 100, the NAS 100. You're looking at that cash high, that London session high. So your high right up there is about 30,484. You're watching that as potential topside resistance. Is that going to be an area where potentially we break through? Yeah. So even though it's resistance, I'm not interested in shorting it. And the reason why I'm not interested in shorting it is because that divergence between the Dow and even the S&P and the NASDAQ, odds are the NASDAQ's probably going to make some ground up here late in the session. So if you wanted to sell from right up here, you could. I can't recommend anything, but I don't recommend that. Let's go ahead and just take a good look at what I've got cooking with the throw my indicators up there. We'll go ahead and throw the US 100 up there. I want to break this down to a 30-minute chart. That's how I like to do it, right in here. So what's happened today? Opening bell, ding, ding, very choppy. Now we're rallying. So if you got a U.S. session rally, we're making new highs during the U.S. session. That right up there was our London high, what I'm talking about. So should you be a little bit cognizant of that? Yeah, you probably should. But still, I really have no problem buying this market. I just have to get good trade location. So let's say we get a late day pullback down into this zone, maybe the next hour or so, where we come down and check out that 13 period EMA, that 13 EMA and 38%. That's pretty nice convergence down there, right around 323 and 3306. That's not a bad long. That's not a bad long at all. So I would be looking for a pullback here. We are more than likely going to see some slowdown right in this zone. However, I don't believe it's the top of today's market for the NASDAQ, and that's probably the reason why I would say probably pass on the rotational sell there. You could get a breakout late in the day and see the NASDAQ come from way off the pace to close, up 0.5%. I don't want to see that. I don't want to be in the way of that. So watching that closely. NASDAQ, E-mini NASDAQ futures, if you guys are trading or if you're interested in this market, this is a good one. It's very active. It's what you'd call hot. This is the futures contract, of course, and you've got the point of control developed really right in this zone. So you're right at 30,470-ish. And what that means essentially, that was the overnight point of control going in right here. Today's point of control, the U.S. session, you've got it way down here. But what's happening that's key is we're trading towards the top of that value area, which sort of coincides, as it would, sort of in conjunction with what we had during that London session. So pretty thin chain volume-wise up here. This looks to me like a potential breakout. It's not really a B formation, meaning the sellers probably not going to sell down into this just because that chain is not really that thin. We've just sort of traded right in this range all day, and it's sort of been a buyback in the London sell-off. So sort of to wrap up our discussion here on the US 100, I hate it. For today, I don't like it at all. I mean, if I was going to do anything, excuse me, I would probably put maybe a stop limit or potentially a stop market order right above the daily high, which is at 30,544.50. Maybe try to play a breakout up there, but that would be a very, very swift trade. As far as selling right now, I'm not interested. If we pulled back down, if we saw like a crash here in the next hour and a half, 90 minutes, yeah, I would probably buy the bottom of the value area in the point of control right around 30,319, somewhere in that zone. And if we wanted to make this even harder, we could put our Fibonacci's up with something like this. They don't really help us. You could maybe buy in there. I'm not interested. I would wait for a test of that zone right down in there. Do you get it today? Probably not. So that was a long way of me saying, Kelvin, that if you're trading it and you have a strategy, go get them. For me, not my cup of tea. Not today. There's better things out there. We'll take a look at what we have in the E-mini Dow. This is a much different scenario. A lot easier, isn't it? You can see exactly what's happened. Boom. It's a big bullish route to the top side. There was your value area high. There was your value area low. We've broken out above that. We're trading way above value. There's your U.S. session point of control, right? E-mini Dow futures. This is tracking the Dow Jones Industrial. So what do we have right here? Opening bell, ding, ding is this candle. Let's run a Fibonacci on this U.S. session. Okay, now I'm getting excited. 38% is right in the neighborhood of that point of control. That's of the U.S. session. That's when the volume has sort of entered the market. So what can we do to make this right? We could buy it. Now it looks to me, we're trading June. We're trading June right now. It looks to me like we probably have already rolled over. But theoretically, you could still trade this if you wanted to. Something like this, though, there's your buy limit order. You're looking to bring this into play. I would bring it into play right down there in between that 38% level and the point of control. We would go ahead, we'd send, believe these are $5 a tick. I would go ahead and send 4 of those long and play for a little bit of money, buy limit order, and we'll see what we got. see if we can get maybe a scalp during this live stream. That would be fantastic. So that's a good look at an intraday strategy that could really show you exactly how one market is superior to the other. Now, I know you guys love the NASDAQ and you love to trade it, and that's great. I don't have a problem with that. You got to trade what you got to trade, right? No problem at all with that. This right here, it's a better market. And the reason why is, number one, you've got a bigger range. We know that we're trending. You've got a point of control, which is the area where we've done the most business during the U.S. session, is right here. We've almost got a rally-base rally, right? There's sort of the before the market, big rally, base, rally, coming back to test this zone. We should be in pretty good shape there. I mean, we really should be in pretty good shape there. So let's go ahead and just wait and see if this pans out during this live stream. I would love it. I think that's a really strong play. I would really like to be able to execute more of these live for you. Maybe we should just start going live at the U.S. Open and just trade. But my take profit, what would it look like? Be somewhere right up in here probably. Just a few points, not really a ton of them. 51, 565. That's a pretty good chunk. Maybe look for like a 20-point bounce right there. Something like that, 17 points. It's not bad. That's very doable. That's very doable. So the market, is it coming our way right now? We still got to go quite a ways. It looks like it's almost there. We still need probably another 40 points. Now, if we want to be aggressive, we could move our entry point right up here to the 38% level. I don't necessarily want to do that. Let's wait. That point of control in this value area down here is what we really want to play off of. I would love it if the 38% was right. I mean, if it was right down on that point of control, then we would start talking about 5-star trade, A+ setup. It's not quite there. That's when we've got to sort of use our noodle and say, well, what's going to happen here? How's this going to work? We'll see. We'll see what happens. It is coming our way, though. We're sitting right there at 43. We're only about 36 points off. And the way the Dow is moving, I mean, that can happen in 5 seconds, realistically. That I like. I'm enamored by that. All right, let's go ahead and say we've got a whole bunch of messages I'm way behind on. Marvel and the Expendables. Good to see a Marvel. Peace and love to everyone. That is a positive message. How about peace, love, and green pips to everyone? I'll throw the green pips in there. I sure appreciate you showing up. I haven't seen you for a while, that's for sure. If you need anything at all, be sure to reach out over at How to Trade. Say hi. Sono, good to see you, Suno. Welcome. Let me see, Marvel. It's been a while. I missed you all. Fantastic. Greetings to you, Sir Shane. Just Shane's fine. Sir's nice. I'm not in England anymore. I'm not in the UK. I'm not in Britain or even in Europe anymore. So back here in the States, I appreciate it, but it's not quite the same. Let me see. Market's very high or low, big size. It's just not. Today is a challenge. Today's a real challenge to trade. This one right here is a pretty good one, though. Let me see. I just managed to get a short on the Great Britain Pound USD a few hours ago. We'll go ahead and take a look at that one. All right, one thing that I did want to recover, I'm going to go ahead and keep that on my I don't know, I guess my left eye, and with my right eye, we'll do this. Gold. Talked a lot about this level yesterday. I spent a lot of time breaking down the gold market just because a lot of folks really love to trade it, and I'm liking what I'm seeing out of gold. I really am. I'm liking what I'm seeing out of gold. I think that it's a fantastic market right now, and it's one of those that you can attack intraday, that's for sure. The volatility has definitely slowed down since just a crazy January, a crazy February, just a crazy March, and now we've sort of settled down. This 38% level is one that I talked about a lot yesterday, 44.21-ish, and we said basically you need to be looking at about 44.25, being that quarter handle, and you go for it. That's for sure. But Gordon Williams, big money, Shane. I wish, Gordon, I wish. No, I'm not too worried about the cash. I like to trade, that's for sure. And, when you make a lot of money, that's a lot of fun. I know that for a fact. But, big money, too many people are defined by money. Get good at this discipline and you can do whatever you want. I'd rather do whatever I want than sit around and count money all day. I don't know about you guys. But this was good. This was good. This was really good. So right there, you've got that area right in that zone that we talked about. That's a monthly Fibonacci retracement. We said, okay, 422, 425, somewhere in there. Take a look at it. We had it outlined right there. There's your initial test, 44.26. If you didn't like that, wait. This one comes across the board, and what happens right there? 44.24. Boom. That happened yesterday afternoon here in the States. This was about 5 hours after we sort of were done, but you could see since then that's a beautiful trade. I mean, it doesn't get, you say it doesn't get any better than that. It doesn't get any better than that. Low 44.424. What is your high? Not even a day later, 18 hours later. What's your high up there? It's 45.515. So when you start talking about a big move, about $100, I tell you what, Gordon, big money, Shane, that would be a big money play. I mean, you're letting a few contracts roll, or you're letting a few lots roll. That's a banger. That's a huge banger. One observation that I want to point out here. Now, all the CFDs are different, and the way that the spreads are assigned are all different. So I mean, some assign spot gold XAU USD with a much different spread. Some some decimalize the actual trading differently, and a lot of that goes down to your liquidity provider and your broker. But remember, yesterday we were looking at staggering spreads in gold. They were like 100 pips. This one right here, according to this data feed and brokers, about 50 pips. Tight market. Got a lot tighter. Those spreads sort of got tighter. That means that there wasn't that crazy action that we may have seen, previously. This right here, though, do you hit it again? Yeah, if you get a chance. 44.25, I think you have to look at it. You have to respect it. As far as selling goes, I'm not interested in selling. Intraday stuff, gold, right now trading intraday gold is extremely challenging. I don't think you want any part of it. But that right there is a fantastic look at a market that saw a key level and rejected it. And it really, that Fibonacci support zone worked in a big way. So my game plan for gold is simple, and it's not attractive. Believe me, it's not sexy. You're not selling any books or movies with this type of strategy. But hey, listen, I can't remember who said it. Was James Vanderbilt, somebody, one of the big industrialist tycoons around at the turn of the 20th century here in the United States, was, Lord, give me a boring business. Hey, listen, boring's good. Boring empires were built on boring. And this right here doesn't get much more boring than waiting for 44.25 again. It doesn't, but 4,425, 4,425-ish. That's a pretty good one. That's for sure. As far as what we are looking at here for a potential 920 EMA trade, I'm scoping the Euro USD 4-hour chart. A couple of observations, though, first, before we dive into this. Number one, it's just been a whipsaw, just a massacre. Take a look at this. There's a sell. This is a 4-hour chart. 4-hour chart, which typically puts us in great trades. That sell was a miserable loser. This bid, you took a draw. You got a decent pop, so you might have been able to make a few bucks there. But something like this, where you've got the sell develop there, and then the buy, and then the sell, that is the weave formation. That's called the weave. And when you get into the weave, it's very, very, very difficult to play something like the Euro USD successfully. It means the market's flat. We're not moving topside. We're not moving downside. You're better off going to a different type of strategy than a crossover in a flat market. So I wanted to sort of show that as a great example of the 920, because a lot of times I get into these modes and I go, oh, there's a winner, there's a winner, there's a winner. Oh, this is the greatest strategy ever. And some people really love the 920. I'm one of them. I think it's a great strategy. But the problem that we run into is when we're too optimistic and we're looking at everything with rose-colored glasses and we're feeling good, we've got to be realistic about what we're doing here. We have to say, well, okay, Shane, what does it mean? Well, let's take a good look at what's happening. This is a 4-hour chart. A 4-hour chart on a Forex pair should keep us out of chop. It did not. It did not. That's a straight-up loser right there. That's a loser. This one, potentially, you could have got a few pips if you had bought here. 116.57. You had a high up there of 116.85. I mean, it's just not enough money. 18 pips. I would call that a loser. This one right here, this sell, that's a loser. This buy, that's probably a loser. Now this sell here, did you make any money at all? 116.27 down to 116.94. Yeah, 34 pips, something like that. 33 pips. I mean, I'm not saying that I hate it. I'm not saying that I hate that last sell, but the market's got to open up and do something before we can get in there and say, yeah, this is a good thing for us to be doing. So I call this a teachable moment. And the last thing I'm going to do is sit here and tell you that the 920 EMA is the holy grail, because even on a 4-hour chart, which is my favorite time frame to trade Forex pairs, It really is. Aside from the dailies and the weeklies and the monthly levels, I love it when those come into play. But you're talking about on-the-fly intraday trading. I really like the 4-hour charts. Pullbacks, like it. I think it's a good time zone to be trading Forex pairs on. That being said, that's ugly stuff. That's ugly. That's what we call a weave. So there's a couple ways to deal with a weave. You could take it up. You could adjust your time zones to like a daily. The daily, you can see you got a nice sweep right up there. That was a pretty good move on a daily chart. Your sell signal here did pretty well there. Not too bad. I mean, it wasn't the trade of the century. 116.25 down to, about 115.77, so maybe like 50 pips. Still, though, your risk was minimal, especially if you're putting it above the day's range on your signal bar. That works well. Is that a better way to do this? In a flat market, yeah. But, maybe just find something else to trade. As far as the Euro USD goes, though, I have no problem diving into it with our macro levels and just take a look at it. Look at our gold chart just pops up by default. That's how good that level is. So look at this. Look at this mess. This is a mess. I mean, people love the Euro USD, and they trade the Euro USD, and they say, okay, what's going on in the Euro dollar? Euro dollar, Euro dollar. And they do it because the spreads are tight and the liquidity is huge. But take a good look at this has been an absolute mess. This was the move. January 2025, doji, February, March, April, May, June, and since then, nothing. Since then, absolutely nothing. We had a test of 120 up there that developed early this year, January 2026, 120.83. Since then, we've sold off, and we are just absolutely rotating in a mess, in just a messy formation. So when I look at something like that, I'd say, okay, we're not trending. We're sort of in this phase, something like this. And these phases will go on for years. They really will. You get the big move right there, 2021, and then you started off with just sideways trading for like a year and a half, a year. Okay, so if we're trying to trade trends, we had the worst year in history in 2024, right? We finally got in on a bit of a move here and then a bit of a move here. But if we've been trying to trade the Euro USD in a trend strategy this year, it's been a nightmare. So how can we trade it? Well, there's a couple of ways that we can trade it. We can set up all sorts of reversion strategies. We could also look at that EMA. That's a big one, 13-period EMA, 115.61. Pretty good area. 115.61, about 60 pips south of where we are right now. I would keep a close eye on that. As far as Fibonacci's go, I would throw them away. They don't work when the market's flat like this. If you wanted to do something maybe time-based and say, okay, we're going to work from January 2025's lows all the way up to January of 2026's highs, all right, if you want to build a Fibonacci like that, that's something I would buy for $1. But look, at our entry point would be 38%. It's 300 pips away, 270 pips. I'm not interested in that. It's just not good enough in my view. We're not going to wait all summer long for that trade, unless we're going to put, 100,000 on it, 200,000 on it, then maybe. But this type of situation right here with this EMA 115.61, that gives us a chance. But you'll see what I mean on the weekly. These aren't moves. Look at the Bollinger midpoint in the 13-period EMA. Absolutely flatlined. That's a sign of a rotational market. Rotational markets mean we should not be playing breakouts or trends. We should be looking to play reversion of the means. Reversion of the means, we sell the upper extreme of a range, we buy the lower extreme. Something like this could be very juicy with our Bollinger Bands. 114.69, it's still a mile out there. We'd be looking to buy down here, sell up here. Still, we don't have any entry points, really. Do we want to sell this weekly convergence up here? It's not bad. It's already gone, 116.64, maybe. But the problem with flat markets is those profit targets aren't there. The money's not there. I mean, you get into that trade and you go, okay, I'm gonna hit this one for 40 or 50 pips. It's not there. 10 pips is there. 12 pips. It's a challenge. This type of trading, these type of environments are challenges. Daily chart, same. I mean, look at it. It's the same. We're starting to open up a little bit, but I mean, there's that old saying. I haven't said it for a while. Maybe none of you have seen it, but I mean, it's when the alligator's mouth is closed. That right there is the eye of the alligator, and you'll see the Bollingers. And usually when the gator's mouth is closed, you don't trade. You wait for the gator to open its mouth. That shows you that there's volatility involved. This right here, is just a flat market. Starting to move a little bit, but this type of stuff, you're playing reversion the whole way. You're not looking to play trends or breaks, not even on NFP tomorrow. Spike low right down there, 21st of May. That would be a support zone I would be looking at. The low 115.76. Now this is an area where I would say that a lot of the smart money traders and the ICT guys out there, there's a lot of you guys and gals out there that love that. What would you potentially think that is this day right here? A bearish liquidity sweep? I just call it a support level. But I don't disagree with identifying that level as being important in a dead market, a quiet market. This area right here, this daily double bottom that developed in late May, really May's lows. I mean, that's essentially what they are, is May's lows. It's there. It's there. So that's a potential support zone. But once again, we have to be conservative with what we're looking for. I mean, let's say we're buying 115.75s, 115.79s. Man, we're only looking for 15 pips, 12 to 15 pips. This market is a dead fish. It's a dead fish. And you'll find in life when things are moving, when there's motion, things get easier. You'll find in trading when there's motion and things are moving, trading gets easier exponentially. And that's really what this game's all about, is finding what to trade and when to trade it. We're going to do a little bit of crude oil analysis now. I'm going to show you a few of what I'm looking at. Actually, we'll come back to that. I've got a few things to talk about fundamentally. Had a question there. Gordon Williams. Let me see. A bullish flag on the Euro USD, potentially daily. Hang on a second. We'll get right back to that bullish flag. We've got a few. Okay, we've got a few trades developing here. So let's go ahead and send it long. I don't particularly like these trades because we are fighting trends. We are fighting trends when it comes to crude oil. But you can see, let's play a real tight scalp here. Let's play a real tight scalp, drag and drop functionality. We just move our profit target right up to where we want it. Let's put it right up here, try for about like $100. Stop loss is incredibly tight. These are 1 minute charts. I mean, you know, this type of stuff, playing that tight, your winning percentage probably isn't going to be very good. 5 minute chart, 30-minute chart, be possible. These two, okay, we're getting a decent break right now. Are we going to go up and get our money? Are we going to get paid? Well, let's go ahead and wait and see. Stop loss here, we're only risking what? All right, now we're getting our move. So, I mean, theoretically, this is how the 9 EMA is supposed to work. All right, we hit our scalp on the WTI. Can the Brent finish the job? Can Brent crude finish the job? Maybe, maybe not. That was a pretty good trade, very tight. Remember, if you're trading that 9 EMA on a 1 minute chart, going against sort of the trend, playing that tight, it's problematic. Your winning percentage is probably going to be a little bit lower than it should be, and whether or not you're profitable is going to depend on things like slippage and fills and spreads. This right here, notice our Brent crude oil has not filled us up yet. So let's go ahead and let's do something a little bit more unique. Let's play for some money here. Let's put this up there, and let's really attempt to fight this trend. That's roughly a 1-to-1, something like that. We'll go ahead and watch this thing wander. For me, this would have to be up here just a little bit. Can we get away with doing stuff like this? You can do it. Just understand that your probability of success fighting an intraday trend with a 1 minute chart, you're going to run into trouble. But hey, maybe we get paid off. We got a bigger trade going. It's almost a short-term position trade there in Brent. Let's go ahead and let it play out. That was a nice little pop out of WTI. So in any case, going back to the bullish flag on the Euro USD, if it's a monthly bullish flag, essentially you're right, Gordon. I mean, it's a good observation. It really is. Just to sort of show everybody that isn't really hip to what we're talking about, a bullish flag, there's your move. Essentially what a bullish flag is a run and rotate. So there's your bullish move. There's your flag. Just like a flag. There you have it. So what does it mean? It means there was a run and a rotate. So now there was a directional move, and now we're just sort of moving sideways, and we're either going to reject the top side level, which is 120, or we're building momentum and building pressure before the next big move. For me, we would have to see something dramatic to trade up over 120 here in the euro. You would need to see the United States more than likely get back into that interest rate cut mode. It's not going to happen, not for a while at least. Inflation's way too high to cut. And I don't know that the new Fed chief, even though he's supposed to cut interest rates, I don't know that he's going to do it. But this is a good trade. I mean, it's a good observation. How could we possibly play it? I can tell you how the big guys will play it. They'll watch the fundamentals, and they'll say, okay, well, we moved. What do we like? Well, we like a breakout up over 120, and that's what they would do. They'd say, okay, we like the Euro USD maybe to revisit levels we saw in 2014, and they would throw down their huge capital and try to ride that on the back of fundamentals. That's a fundamental trade. That's an investment. That's a fundamental trade. They probably wouldn't be doing it on the derivatives markets either. Probably just accumulate, a bunch of a currency and hold it, more than likely, right? They got big vaults. They got hundreds of billions. In any case, could we potentially trade this on this level? I just don't see it for us. Be looking at those levels potentially as being topside resistance after the break. It's really hard to argue with 120. Probably be a seller here. Probably be a seller up here and here and here, short-term trades. But once we broke, we could definitely scale in on pullbacks on weekly and daily charts. I mean, we definitely could do that. But good observation. That's absolutely a bullish flag, Gordon. All right, let me see. I got way behind on this stuff on the live chat. Let me see. No volume today on the US 30. The candles were moving at a snail pace. Yeah, Bab, it just sort of rallied and stayed there. Hello from Kenya, Jeff. Good to see you, Jeff. Welcome. Let me see. A Marvel copied the green pips for another day. Can't beat that. Let me see. Braveheart. Braveheart, 180. Good to see you. Can you look at Filtronic? Yeah, let's do it. Filtronic. This would be very good, though. This US 30, I'm not ready to fold up shop on that US 30. That's pretty good stuff. US CAD, we'll see if that develops. All right, Filtronic. Filtronic PLC, listed on the London Stock Exchange, London Stock Exchange, the LSE. Where is the stock exchange? I think it's downtown. It's not out. It's not Canary Wharf. Canary Wharf's where all the new banks are. Never been down there to the stock exchange. I should have went when I was there, but had a little incident on the subway. Didn't want to ride it anymore. That's a story for another time. In any case, right here, the monthly, you can see right here, uptrend. Clearly, you got a couple of big breaks, and then you've got the pullback. The monthly doesn't really tell us a whole heck of a lot, only that there was a breakout over the past 60 days, and now we're sort of correcting. But this is interesting. Bounced right off that 62% level, so now we're back up. So the uptrend of the last 2 months, or the last 3 months, if you want to call that a hammer, really, I mean, a beautiful monthly hammer there, and the price just takes off. What you have is you still have a valid uptrend. So you can't beat that. So you got a valid uptrend. I would say that, with topside targets, we would have to look at the fundamentals. Probably depend a lot on their next earnings call, which is going to be in August. So as far as that's how I would analyze it, just being as probably a buy and a hold. I think that if you bought somewhere in here, you probably still are holding. I don't really see a big reversal. Can we get a good entry point right now? I mean, it's fascinating weekly chart. I mean, there's the big gap up and then compression, break, right? So now what are we thinking? Do we want to buy it or sell it? If you got it down here, you probably just hold it. If you bought it up in here, is it time to bail yet? I think once it cracks 270, you got a DD. And that's a big loss, especially if you bought right around 400. I mean, it's clear as day what happened here. They tested the waters above 400, came crashing back down. Our point of control became 400. That was the big dog. You know what I mean? Right there. No question about it. That's where the profit taking came in. Maybe some shorting came in. Clearly this week it looks like some shorting came in, or at least some more profit taking. But 400, guarantee you 400 was a target for a lot of people. Then these guys came in and said, okay, we're going to try the waters higher. You went up to 480, came right back down to 400. That's called an area of fair value. For stocks, definitely understand what a fair value area is. And that's just where we do a bunch of business, where the market settles down. For our Euro USD, if I was talking fair value, it'd be right in the middle of our range, somewhere right around 117. That's fair value. It's what it's pretty much valued at right now. We haven't left that area. Last few weeks, still very early, not even as long as that Euro USD, but something like this, 400. Do we think it could rally back up to 400? Oh, yeah, absolutely. Is it likely? More than likely. So I would be, this week especially, if I was involved in this stock, even if I was long from up here, I think 62% would be my line in the sand. If it traded back down beneath 270, I would get out because it could get really bad. It could go 213. It could turn into a free fall, maybe even down into here. If that 213 doesn't hold, Then you start talking about having your stock 150s. That's ugly. So it's not the best situation if you bought high. Probably the key number for this week, the 270 hit and then the bounce, that's actually a really good sign. That's a really good sign for the bulls. This right here, though, 350, you'd love to get a weekly close over 350. If you could get a weekly close over 350, I wouldn't sweat it. I really wouldn't sweat it. And the reason why is because the volatility was so big to take you to 400 to 480, and now you just sort of settled down right around 400. So that's how I would look at it. Fantastic. See, I would have never thought of, some of these things you look at, and it's the biggest thing to remember in the markets. There's always a game. There's always a game. That's for sure. Let me see. Braveheart, I took profit at 380, so looking for a re-entry. All right. Now the re-entry is 270. I know it's Captain Obvious stuff, but really the re-entry was 270, and it was a 62% retracement. It was there. Taking it 380 was beautiful. It's a good job. This right here, if you thought you were going to make another leg up, maybe buying in over 350 in a week or two after things settle down, you might be able to get just a trade in 350 up to 400. You got to think that if you get a weekly close above 350, you're going to go up there and hit 400 again next week at least. So a re-entry for me would be above 350. Of course, the 270s in the past, that's over. But that would be interesting. That's for sure. Let me see. I hope that helps, Braveheart. Let me go. Noku, good to see you, Noku. Hello from South Africa. Good to see you. Met some folks from South Africa and Amsterdam. Nice folks. There were pork bellies. They were raising lean pork. So that's you go to your Korean barbecue and you get the pork bellies and things. That's what they were doing. They were raising. They were up there on holiday and doing a little bit of business. So South Africa. What's my take on NFP? Yeah, we actually got to start talking about a little bit of fundamentals. I sort of got bogged down in technicals today because it's been exciting and kind of fun. Let's see. This is the trade I'm going to be watching while we talk our fundamentals. I want to see this go. I think this is pretty good. All right, let's go ahead and do it. Let's dive in. We'll get to NFP in just a second, Noku, what we can expect. Week 23, today was initial jobless claims. That was the big number out. That's what made all the headlines aside from the U.S. House of Representatives voting to end the Wars Act. Interesting. We'll cover that in a second. What you've got here is NFP tomorrow. We're looking, I didn't even really look at the projections. I think that the numbers have been a little bit better than we expected after really a dismal, brutal fall. Last fall was bad. The winter was not good for NFP. During that government shutdown, the numbers became incredibly disconnected. So I'll go over the exact numbers and projections tomorrow before the number drops. If you want to pop in 10 minutes before the number, that's going to be about 8:20 a.m. Eastern time. I'm not sure what that is, GMT. And one thing about global time zones, they are confusing. They are confusing. But I'll cover that before when we go live tomorrow. So just go ahead and tune in to this channel 10 minutes before, 15 minutes before NFP, and we'll go ahead and walk you through it. Initial jobless claims, though, did give us sort of a look at what a lot of people are expecting. Now, remember, we sort of had an ADP number that was pretty good yesterday. It wasn't bad, and we've got a situation where the weekly figure here just doesn't look very good for initial jobless claims. So we had challenger job cuts. I'm not even going to get into that. That's minutia. That's a peripheral metric. If you're an economist or you want to be an economist or maybe even an attorney, that's when you learn what challenger job cuts are. I don't really know. I don't think you need to know. It's a secondary or tertiary number. As far as initial jobless claims, that's the big one. This is the one that you want to see. This is the one that you would focus on out of this group of metrics. This is the big one. And the reason why is it measures that weekly trips to the unemployment line. These are new people applying for their unemployment insurance. And for an initial jobless claim, that is really how people are trying to decide where the U.S. labor market is. If there's more people going to get unemployment, all right, you're going to say, the labor market's garbage, it's falling apart. If there's less people, you're going to say, well, the labor market is getting stronger, there's more jobs available, so folks don't have to go to the employment line. During COVID, initial jobless claims was probably the biggest jobless numbers, even bigger than NFP. Everybody wanted to know what was happening week by week. Right now, it's not as important. However, there's a lot more people looking at it these days because they are expecting a recession due to the Iran war. We'll talk about that in a second. Initial jobless claims, 225,000. That was above the 214,000 expected and above an upwardly revised 212,000 from last month. So this really did beat, it shattered expectations to the top side. And we're talking about jobless claims. That's a bad thing. That suggests that maybe that labor market's getting a little softer than we thought. Non-farm productivity, that was down. We talked Canadian productivity yesterday. I'm not going to get into that. So productivity is down, which shouldn't happen because of AI, but we'll talk more about that. Continuing jobless claims, that's a situation where a lot of people, well, they try to measure it. Those are the folks that are dropping off the unemployment rolls. It's not as important. It's not as important. Continuing jobless claims has a lot to do with just when those benefits expire. You only get your unemployment insurance for X amount of time, and then you have to move on. So that right there is not necessarily very important at all. Matter of fact, if somebody comes to you and says, hey, look, did you see continuing jobless claims from the United States? You'd laugh at them and you say, you mean initial jobless claims, right? Initial's the one that you need to know. Continuing means less than nothing, in my view. All right, this was the actual read. The number of people claiming unemployment benefits in the United States rose by 13,000 to 225,000 the last week of May, above market expectations of 212. It was the highest initial claims count since the first week of February. Highest initial. What does that mean? Before the war started. Things are getting tighter in this economy. We'll see tomorrow with NFP. I'm not ready to throw the baby out with the bathwater, but things are getting tighter. That jobs market starts coming down. It's going to be really difficult to hike interest rates to battle the inflation. This is a vicious cycle, and it all stems from higher energy prices coming out of the Middle East, 100%. News of the day, you can see it right here. This is our initial jobless claims charted. Don't get too carried away by what it really means, but let's also not overlook what's happening. This is an uptrend beginning back in early April. That's an uptrend. So we've seen jobless claims start to rise as we go into the summer months. Maybe people are taking vacations and want to use their unemployment benefits to go on holiday. It's going to take a lot of money to go on vacation. Believe me, things are very expensive right now. I have to smile because it's just a laugher how expensive things have gotten the last, 6 weeks, 8 weeks. In any case, January wasn't very good in January. What was happening here, though? This is when the government came out of lockdown or shutdown. They shut the government down, and then they started putting all the numbers out again. So I kind of throw those two away. But as we settled into this, now we're starting to see a little bit more pressure on this U.S. economy. There's no denying it. So what does that mean for tomorrow's NFP? I think we're probably going to see a really brutal NFP number. But I'll look at it and we'll put some ideas out and we'll recap it right before the number drops. All right, I'm sort of getting a little bit distracted. I'm watching this trade potentially develop. We're not quite there yet, but this trade is coming into view here for this U.S. It's not the U.S. 30 CFD. This is the E-mini Dow futures, which essentially is the U.S. 30 CFD. And we're sort of watching our key level right down here. Point of control is beautiful right there. That's where our volume's been. 38% is right there. We're going to go ahead and give this a shot and see if it does develop. If it does develop here in the next several minutes. All right, let's check out our news. This is it. This was the big story over the last 18 hours here in the United States. The U.S. House of Representatives votes to end Trump's Iran war. Doesn't matter. That's actually a pretty good headline. Doesn't matter. House votes to rebuke Trump war over with Iran. Okay. Trump hits back an unpatriotic vote. Trump pans bad Republicans who voted to end the war. The single biggest thing you need to take away from this is that it's symbolic. When they vote to end the war, powers, basically what they're doing is defunding the military. They're saying, okay, we're not going to give you the money to conduct these operations. You guys are finished. In order to get that accomplished, it's got to pass both houses of Congress, which means the House of Representatives is the first step. Now it goes to the Senate. The Senate may or may not even take this thing to the floor. All right. There is a Republican majority in the Senate. However, it's not a big one. And the war is not really popular in an election year. So the biggest thing to take away from this is that, yes, several Republicans did vote with the Democrats in this situation, and they're showing the pressure of it being an election year. To break and vote in a bipartisan fashion when you're up for re-election typically does not look good. And these folks didn't care. They did it anyways. It's a first step potentially in defunding the war effort. I think it's dead on arrival in the Senate. I don't even think they'll vote on it or take it to the floor. I really don't, because by voting on this, it means that they have to put their name they have to put their name on it during an election year. And that's something politicians are great at, saying nothing and doing nothing and just getting reelected. So the one thing that I would take away was there was bipartisanship on this vote. Where are we at in 6 weeks if the war's still going? That's the real question. Where are we at then? What does this vote look like then? Does the Senate say, okay, it's time to end the war powers? That's a big deal because our odds right now tell us, and we got to look at our prediction market odds, and then we'll go ahead and sign off for today. But when we look at Iran, what are we expecting to happen? I mean, these prediction odds have been fairly accurate when it comes to elections, when it comes to politics. Even these engagements have been fairly fairly accurate. So look at some of these odds. New ceasefire extension, whatever. Okay, they're probably going to get a ceasefire extension. This is the one I'm looking at because this is the big baby. This is the thing that's dictating everything. Strait of Hormuz traffic returns to normal by the end of June. Only a 17% chance. So how does that work? If the Strait of Hormuz is still closed for business by the end of June, we're talking about global oil stocks probably approaching multi-decade lows. You'll be talking about energy shortages. Energy rationing is going to come into play. The inflation in the United States, if this goes for another month, is going to be huge. The inflation globally, if this goes another month, is going to be huge. And it's all based upon the energy markets. So this is the market I'm looking at. Strait of Hormuz traffic. Is it going to be back to normal by July 31st? Holy cow. So if we take this out another 2 months, what is that vote in the Senate going to look like? They're going to do everything, try to move heaven and earth to get this back to normal. And the way to do that is to defang the U.S. military. That's the bottom line. So can a deal be struck? There hasn't been one yet. Is the strait going to open? If it doesn't, we're talking about a global recession. There's no question about it. 74% chance that by the end of the year. Does the strait stay closed until the election? It's going to be a major, major part of the election. If you just go to politics right here, you can see that, we're sort of, we get into all this stuff here, but I'll find it for tomorrow. We'll look at this stuff tomorrow. But the bottom line is this: who's going to win the House and who's going to win the Senate? The Strait of Hormuz pretty much dictates a lot of that, and that's absolutely crazy, but it's true. All right, doesn't look like we're going to get our trader today. Let's look at one more market, and then I'm going to go ahead and sign off. I want to look at U.S. oil. I haven't brought these technicals out in a long time, and the reason why is because it's incredibly difficult to do anything with our macro levels. The war has messed up our macro levels so badly that it's tough. It's tough to do anything. However, our intraday oil trading's been strong. It's been fairly strong. Let's go ahead and take a look at what we have here. I would be watching this high closely, 129.42. That was back in March of 2022. That was Russia invasion of the Ukraine. If things escalate, that's probably where the market will test in very, very short order. As far as, do we have anything really to go on here? Not really. We really liked our gap area to be filled in, and when this war is over and the strait goes back to normal, that gap's going to come into play right around $68, $70. We could see that easily. If the war's over tomorrow, the strait reopens, you're there. You're at 78 within a week, maybe even shorter. So that area, that gap area is where I'm definitely watching. We were really optimistic down in here where oil was trending towards that $55 barrel, and I had it going all the way down to 52, maybe even sub 50. We were on pace for that. Now we're not. So if I'm looking at just a basic Fibonacci wave count from pre-war levels, right from that spike low developed back in December of 2025, seems like a lifetime ago. It's only 6 months. Seems like a lifetime ago. What do we have? Support. It's absolutely huge down there at 79.50. I mean, we'd be bidders from there for sure. But odds are we're going to sell out maybe that 68.58. That's probably going to be a long-term bid. Now, if things escalate or something goes crazy, then you're going to see crude oil really rally. I am surprised that we're not trading somewhere up in the 110s to 115s. We're not, though. So that, there's optimism here that this thing could be winding down. But a tremendous amount of pressure is mounting, and it's happening fast. You're welcome, Noku. All right, everybody, I'm going to go ahead and sign off. We've gone on for long enough today. We're not going to get our YM trade, our US 30 trade. We will do some live trading tomorrow. That was a pretty good little oil trade, though, using that 9 EMA strategy. We'll be using some strategy trades tomorrow. I'll have some ideas, some key levels to look at as well for NFP Live. which remember I'll be on about 10, maybe even 15 minutes before that. So just check us out wherever you're watching our local channel. Remember, all of our new content, our shorts and our longer form videos are being posted on the Switch Markets YouTube channel. So you can feel free to check us out there. If you want to talk to me, you can certainly do that. You can send me a private message anytime you like over at howtotrade.com. Just go ahead and sign up for your free account and feel free to reach out. I answer every single message that I get. So if you're interested, you have a question, or just want to say hi, go ahead and just reach out. Give me a shout out. You can tell me what you think of the streams. You can tell me what you think of me, my haircut, my shirts, whatever. Or if you have a question, feel free to ask. I'm more than happy to answer. Okay, everybody. It's good to see everybody in the How to Trade community. Tuku, you're welcome. Bobby Bob, you're welcome. Good to see you again, Lita. Welcome back. You're I think I missed you for a few days, but that's okay. Nothing wrong with that. Sometimes we need to take a break from the market. We'll talk the psychology a little bit tomorrow. I've gone on long enough today, but I do want to bring up the point about the challenges that have been facing traders through 2026. It has been a year of challenges. Honestly, guys, back in January, I saw the way forward as being very simple. I thought it was going to be very easy. We were going to bet against the dollar and bet on stocks, and it was going to be pretty easy. We were going to scalp WTI crude and gold, and it wasn't going to be hard. And you start bringing in wars. Holy cow. The world is a much different place now. No question about it. All right, I've droned on long enough. That's plenty. You guys have a fantastic trading session, and we'll see you tomorrow for NFP Live. As always, trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is